Good day, everyone. It is a great opportunity to get across to you again. We'll be looking at a topic tagged financial system this morning under financial accounting. Kindly get the necessary material, that is your biro, your notebook, and every other thing that will assist you to put down some things. When we say financial system, so what do you understand by financial system? Before we go ahead and look at this, we'll first of all look at the learning objective. The learning objective include 1. You should be able to define financial system. 2. You should be able to state 5 functions of financial system. And 3. You should be able to identify and define the different components of financial system. By the way, when we say financial system, or when we use the word system, what does that mean to you? When we say a system is made up of different units that interact together or that work together. In other words, it is made up of different components that relate together and actually work together to get or to bring out a final result or to obtain an output. So when we say financial system, so what does that mean to us? Financial system consists of a set of subsystems, that is a set of other smaller units or components of financial institutions, financial market, financial instrument, and services, which help in the formation of capital. So they are different smaller units that make up the whole of a financial system, and which consist of financial institutions, financial market, financial instruments, and services that actually contribute towards the formation of capital. We know what capital means. So we said capital is the owner's resources or wealth that are used in creating for that wealth. Ordinarily, it is the owner's fund that is committed or that is used in running or starting a business. Financial system provides a mechanism by which savings are transformed into investment. In other words, it enables savings to take place, and those savings at the end of the day are eventually converted into investment. So they are used to invest in different businesses. What are the functions of financial system? The various functions of financial system include 1. It provides payment mechanism for the exchange of goods and services. That is, it puts in place an arrangement for making payment for goods and services. That is, goods and services that are actually bought and sold. So making payment for them is made possible by financial system. Number 2, it provides a mechanism for the transfer of resources across nations. So as a result of a financial system, that is financial market, financial services, and financial institutions, so it is possible to transfer or move resources from one location to another. For example, it is possible to move capital, to transfer capital from a location where it is sufficient to a location where it is required but is insufficient. It promotes the process of capital formation by linking the supply and demand for funds. As a result of a financial system, so it is possible to link the supply and demand for funds after capital has been formed. That is, when individuals and organizations who have the resources, that is the financial resources, and they've put them together and they are ready to invest them. So it is through the financial system that this set of organizations and individuals are linked or connected with those who that actually want to make use of such funds or capital. So they have, individuals, organizations have their capital, while some people that do not have the capital, but they actually require the capital, so they can easily get across to them through the financial system and then obtain such funds and then make use of them at a fee. It assists in the selection of projects to be financed and reviews their performance. So financial system equally help to identify projects that needs to be financed and then help to review them to see the level of their performance or how far the objective of such projects have been achieved. In addition, it serves as a link between savers and investors. So financial system is the one that actually connects those people that wants to preserve, that wants to keep their funds and financial resources with those people that actually want to make use of such funds, that is the investors. Also, it provides detailed information to the operators in the market. It provides detailed information to those that are operators in the market, that is the investors and the savers, investors and savers, or those that are having their funds and those that wants to make use of those funds and invest them. So it gives useful information, it provides useful information to these two categories of people. What are the components of a financial system? So the components of financial system, those things that are found in financial system include the following: 1. Financial institutions, financial market, financial instruments, and financial services. So all these, they constitute what we refer to as financial system, different units or different components that actually interact or relate together to give us an output or to help us to achieve an objective at the end of the day. Description of components of financial system. The components of financial system, like we mentioned, include financial institutions. And when we say financial institutions, these are the intermediaries that facilitate the smooth functioning of financial system by bringing investors and borrowers together. That is, those people that want to invest their fund, those people that want to actually make use of those funds. So they are brought together. There are individuals, organizations that may have a large fund or capital that they want to invest. For example, in landed property or in treasury bills. So these individuals are eventually brought together to those people that want to borrow that type of money and actually use them. We also have the other components of financial system and include Federal Ministry of Finance, Central Bank of Nigeria, Nigerian Deposit Insurance Corporation, Securities and Exchange Commission, and the Federal Mortgage Bank. And the banking components of financial system. One of them is the Central Bank of Nigeria. And this bank is the apex bank, that is the highest bank, and is the regulatory authority of the financial system. In other words, it regulates the activities of all other banks and other financial institutions. And its functions. Its functions include: 1. It issues legal tender. 2. It acts as a banker to the government, an advisor to the government. So this particular central bank is the one that actually print or make our naira and kobo, that make it available to us by printing them. And it also acts as a banker and an advisor to the government. Number 3, it acts as a banker to other banks. So other banks in the economy, they equally transact or carry out activities with the central bank. It could be maybe to keep part of their lodgement with the central bank, or to ask for some bailout at the time of difficulties. Also, it manages the accounts and debt of the country. So the central bank is one that is having the details of the level of indebtedness of the country and the amounts that have been repaid. Also, it is responsible for the issuance and sales of treasury bills. That is, when government wants to either increase money in supply in the economy, then the central bank will help government to will help government. When government wants to increase the supply of money, it will help government to buy treasury bills from the society or from the public, and when it wants to reduce it, then it will sell treasury bills to the public. It determines the appropriate bank rate. That is, it sets the appropriate bank rate, that, for example, the interest rate that should be charged on loans, on savings, and so on and so forth. So the central bank is the one that is given, that actually determines the rate that is charged. It regulates bank liquidity ratio, that is, determines the volume of cash that is available to different other banks, that is, especially commercial banks. It regulates the amount of money that is with them to meet the needs and the demands of their customers from time to time. It discounts bill of exchange. That is, it helps to discount bill of exchange. Discounting bill of exchange has to do with either providing the fund before the maturity date of the exchange, bill of exchange, or selling or paying the amount of money that's required, and then at a reduced amount before the maturity date of the bill of exchange. It acts as agents of payment. So it equally helps government in making payment to international financial institutions in the that interact or transact the activities with the country. Other components of financial system include non-banking institutions. These are institutions that render banking service but don't have banking license. In other, they are not issued with banking license, but they are involved in rendering banking services. Examples include insurance companies, Nigerian Stock Exchange, Security and Exchange Commission, and the pension fund administrators. Insurance companies. These are companies that provide guarantee against losses. In other, insurance companies help to protect individuals and organizations against likely risks that may happen or occur in the nearest future. And its functions include: they provide protection against future risk. That is, they help to cover individuals and organizations against likely risks that may happen in the nearest future. 2, they help in spreading risk. So instead of individual bearing the cost of a risk that happens, so that type of risk is eventually spread across a large number of people. Then insurance also help in assessing diverse factors leading to risk. So they help to identify the likely factors that may lead to some risk happening. They serve as a medium for savings and investment. It is possible for an individual, through the activities of an insurance company, to save in form of annuity from time to time against a particular period or years. So when this particular number of years mature, then that type of individual can eventually refund or obtain that particular money, or the amount of money is paid to the beneficiary if anything happens to that particular person. Then insurance also promotes home and foreign trade. So it gives the confidence to investors to be able to commit their money into home and foreign trade. Then we have pension funds. Pension fund administrators, these are companies that provide guarantee against losses. Its functions include pension funds administrators, these are companies that provide guarantee against losses. So pension fund administrators are those organizations that actually help to save towards the retirement of individuals and a group of people that are employees. So at the time when such individuals when they eventually retire, so the pension fund will now pay or refund the amount of money that they've paid into the pension fund to them. Pension fund, this is an institution that helps employees to open savings account, invest and manage such pension accounts for them. Then we equally have Nigerian Stock Exchange. This is an arrangement where one can buy and sell shares and bonds. That is, the stock exchange provides the market where individuals, business organizations can actually buy and sell shares and bonds. It's also a place where businesses can raise new capital for expansion. That is, business that wants to increase their activities or operations, they can actually come to this particular market and then raise new capital. What are the functions of the stock exchange? The functions of the stock exchange include: 1. It provides an avenue for companies to raise capital. It enables shareholders to trade in shares of listed companies. It helps in the effective allocation of resources within the economy. Then we equally have the financial market. So the financial market is the market for raising short and long-term funds. And it is subdivided into two. We have money market and capital market. And what are the functions of the financial market? 1. It promotes the creation of credit and liquids. And 2. It serves as a medium for boosting savings. It promotes the creation of credits and liquids. It serves as a medium for boosting savings. That is, it helps to encourage savings among the citizens or the populace. It promotes financial growth in the economy. That is, it enables the economy to grow. It enables funds to be built up in the economy, and this fund that is built up or that is accumulated can eventually be invested. This is when it's financial instrument. This is a claim against a future income or the wealth of others. So we have different financial instruments. It could be in form of bonds. It could be in form of treasury bills. It could be in form of a bill of exchange and so on and so forth. Conclusion. In order to ensure proper functioning and development of the economy, there is a highly integrated financial system which interact to ensure that the aforementioned is actually achieved. Assignment. What is financial system? State 5 functions of financial system. That is number 1, A and B. 2. List and explain 5 components of financial system. And 3. Describe one component of financial system and mention 4 of its functions. The reference materials include 1. Simplified and Amplified Accounting for Assets by Femi Longe et al., Longe Publishers, Lagos. Business Accounting for West Africa by Umuya Gio, Learn Africa, Publishers. Thank you for your time and attention.